Hey guys, it's Will. I just want to do a video on the markets again. So hopefully you had a good long weekend for the Americans. And in Canada, we had Canada Day. So markets were closed yesterday in the States. So we're going to take a look at the markets as usual. The NASDAQ, they're all kind of in similar situation here. If you've been watching my videos, you notice that I've been talking about a downtrend for quite some time. I'm not just doing it, really late in the game. So hopefully you've been following my videos. If you're interested in avoiding, see, like you have this uptrend. If you draw a line even underneath the bottom of these points here, you break that trend, you start to see break of the 50. I mean, you break through the 50 a bunch of times, but it pulls back. But you have this big trend line long term. Once you break that and you break below the 200, then you bounce. I was talking about resistance off the 200, down sloping 50, then it crossed the 200, then you had another failure. So you have like 3 times where first it broke through, and then 3 times it tried to break through there, the 200. Now you have a down sloping 200 and a down sloping 50 below the 200. And then I've drawn these 2 lines. We have a channel here, like a downward sloping channel. So some people can trade like at the bottoms. Once the channel's established, you get close to it, you could try to trade that, or you could even try to trade once you fail at the 200, you can short that or buy inverse ETFs. So the points you want to get in at, ideally at points where it hits the trend line or the 200 or the moving average. So right here, as it starts to slope down, you have a little failure here at the 50. You could short it again, like if you've gotten out of it between the 50 and the 200, because sometimes you'll see support at the 50, but once it broke through and it failed at the 50, you've got another downtrend as well. And then when you have this trend line here, there's an option to buy when it gets close to that trend line, but that's shorter term situations. And both of these times we never quite got even up to the 50 here. So that's a daily chart. If we go to the weekly chart, we're obviously in this channel here, but we we basically are close to the 200-week moving average, really far down in the momentum as well. We haven't turned up at all on that, so it's downward sloping. I forgot to mention the momentum. In this case, the price percent oscillator, or MACD, you can use. PPO basically creates a situation where you can compare all the different stocks they're all indexed in the sense that 0 is your base, usually at the 50 days where the 0 line is when it gets crossed. But basically, the strong ones are above the 0 line. So you can compare momentum across stocks with the price percent oscillator. So if we go to IWM, that's the Russell 2000, same situation, downward slope. As I mentioned, we bounced off the 50, failed at it quite a few times. We're in this downward sloping channel, low on the momentum scale. We did cross it up here. So sometimes when you cross way down low, there's a trading opportunity, but not all the time, like not a very long term situation. This whole period, except for this little blip here, didn't even get up above the 0. If we go to S&P 500, so I had a line here across here, but then it broke through that. Now we have, I'm going to get rid of that line just for clarity. We have this kind of a widening almost channel here, but the 50 is down below the 200 now. The 200 and the 50 are both sloping downwards. In all cases, in the other cases as well, lower highs, lower lows. That's what I mentioned. These are these peak points here. These keep getting lower, and the lows as well are getting lower. So lower lows, lower highs. Dow Jones, same situation. I'll just turn off the drawings for a second. but lower highs, lower lows, 50 down, sloping down, crossed already down here, and now the 200 is sloping downward. If we go to the weekly chart, we're in this downward sloping momentum, and there's no cross or anything, and we're close to the 200 week moving average. So there was a bit of a bounce off of that, but we are in a downward slope. So I would say that it's still downward momentum in this case, especially for the weekly. So if you're in Canada, there's the TSX, so that's xiu.to. Looks pretty bad. Lower highs, lower lows, downward sloping 50, etc. It was doing a bit better than the other ones because it's got oil and resources, but if they're trying to generate a recession or reduce demand, then that's gonna hurt the oil and gas and the energy and all that stuff, materials. If we look at I've got a chart here. Oh yeah, I was gonna mention, if you want to get TC2000, this is the software I'm using. You can use it on your desktop or on your iPad or your phones as well. You can get a link in the description below to a free trial or $25 off your purchase. I've got these custom columns, like 90-day performance, so you can see that TSX went down 8%, but the NASDAQ went down 17%, the S&P went down 11%. And in terms of the 5-day performance, the TSX has gone down the least compared to Dow Jones and NASDAQ and S&P and all that stuff. So, because it's kind of a resource heavy, and banks as well. So from there, what I usually do is I look at the sectors, and this is the pre-market. That's another feature of TC2000, is we can see the pre-market for the US stuff. So what I have is a scan. I want to see that it's above, the stocks are above, or the ETFs, let's say, are above their volatility stop, so a green volatility stop, above the 50-day moving average. The history is more than $5, just, I don't want to get really cheap stuff. That's usually for stocks, but the slope of the momentum is greater than 0, so you want to see an upward sloping momentum. And this last one is that the price percent oscillator is above 0, and that is usually coincides with the 50-day moving average. But sometimes you'll notice that the actual price percent oscillator will get up above the 0 line, but the blue moving average won't. So it's a slower moving, obviously, line, but a lot of times that'll save you from getting in because the blue line. So you could change it so that it's actually the moving average that gets up above 0, but that'll be a delayed reaction. So you can see how much since basically this October that we haven't been above the 0 line, which is similar to the 50-day moving average. But anyway, so that's the scan, and that filters out a ton of ETFs. I've got a custom ETF watch list as well, because there's tons of ETFs that have low volume or duplicates and stuff. So I find, the ones that I feel are among the best ones, or the typical ones. And so what you'll notice is that, what I noticed was that these ones are basically biotech. So Germ, IBB is the biotech NASDAQ iShares, and then ARC-G is the ARC Genomics. They're all about just poking above the 50. Now it's still downward slope and everything, but you can see how the momentum PPO has gotten up above close to 0 now. And of course, this one rolled over. Like I said, the momentum, you can look at the moving average, it didn't quite get above 0. So that, if you want to use that line to be a bit safer, we're not quite there yet, but you can see after this huge long downslope, it might still bounce and go down more like it did here, but you want to watch that. So these are the ones that are above their V-stop on the daily chart. The other thing is the US dollar is super strong. You can see here, it's unbelievable. And I'm going to show the lines, but basically what you want to do is get in. If it's in an uptrend like this above the 50 and it bounced like right here, after this downslope, when it crosses, this is where you want to get in. And so if you didn't get it, if it goes really steep like this, after this pullback, you know, you can jump in there. And then you have a low, you have a spot right here, which is, you could use below that for your stop loss. So the US dollar continues to be strong with a lot of world issues. You know, the US is kind of a haven in a sense for people, I guess. If they sell the market as well, they're getting out of stocks and things and they're putting it into the US dollar. So if we go to weekly chart, it is pretty steep, but like if you have a line here, there's a flatter sloping trend. This is more steep right now, but you know, it's strong. What is this one? Hong Kong. Yeah, I mean, I'm not too happy with that one. I'll go back to daily chart. Yeah, it's not something I would get into, but we did get up higher in the momentum. If you turn that off, I also have these columns for 90-day, 30-day, 5-day performance. You can see like recent strength. So you have, but I mean, it's still in this big downtrend. Aluminum, TLT. But you can take a look at stuff and see what might be perking up a bit. So it's a bit of an earlier entry. Then if you go to 30-day, there's a lot of Asian stocks, KWEB, EMQQ, MCHI. Those are the Chinese stocks or ETFs. And after, you can see we broke this downtrend, we got up above the 50 and then we bounced off of it. So we have this uptrend in those stocks, in those ETFs. And you can open up the, in TC2000, which I like, you can open up any ETF usually and you'll get a list of all the stocks. So that's where the NEO, Lee, XPEV, those are the car, EV car stuff. And then you have other ones, Baidu and stuff like that. So you might want to look at those. Solar started perking up a bit, but right now it's stuck below the 200. But, you know, it did get up a bit above its, but you know, we have this downward trend. If you use a weekly down, oops, I already have lines on it. You know, we're close to maybe breaking through that. So once we got up above the 50 or this momentum's getting close. So it's all coinciding potentially with, you know, a run if we get up above the 0 and above the 50 and break this downtrend. Gasoline. So gasoline's been in a big uptrend of, you know, similar to oil. And there's been a pullback now, but I think, and we did have this little bounce right at the trend line. So if you wanted to wait till you break that downtrend, that pullback, I should say, and it's supporting at this, you could get in there. But, you know, we're heading down here like that a little bit in the daily. This is crossed over on the weekly as well, the momentum. But if it supports on this trend line, you know, you could stick with that. I think that's all I want to say for today. But hopefully, yeah, check out TC2000 and get a free link or $25 off your purchase. In the description below the video, I've got the gold plan and I use US real-time data. So I can see, like in the markets here, that this is actually 6:13 a.m. Eastern time, and that's real time. And that goes for stocks. If I go to Amazon or something like that, it says 6:13 down here, so you know that it's showing you the pre-market. If I go short term, there's a gray area if you want, and it shows you that pre-market area, that you're in that pre-market. And you could potentially trade during the pre-market if you have that in your brokerage account. So, all right, guys, we'll talk to you in the next video.